Eurjpy is moving in the descending channel, and the market has reached the lower high area of the channel. The Bank of Japan has unequivocally expressed its commitment to maintaining an ultra-accommodative monetary policy, causing the yen to continue its slide against the US dollar. Anticipations are high that the Bank of Japan BOJ will revise its 2023 core inflation forecasts upward to approximately 3% during the forthcoming October 30th and 31 meeting. Additionally, the BOJ is set to provide fresh projections for 2024 and 2025, and if these are revised upward, it could signal the beginning of a potential shift towards policy normalization. Xagusd silver price is moving in the descending channel, and the market has rebounded from the lower low area of the channel. The anticipated U.S. inflation data for September is projected to come in at 3.6%. Slightly lower than the 3.7% figure recorded in August. Consequently, the US dollar is weakening against other currencies in anticipation of this data release. The DXY dollar index is poised for a weekly decline leading up to the eagerly awaited Consumer Price Index CPI report. If these losses persist, it could mark the steepest 5-day drop since mid-July. Additionally, there's a growing bearish sentiment evident on the daily chart. Let's analyze the current status of the currency in anticipation of the inflation report. This Thursday, it's expected that U.S. headline inflation will weaken, with September's year-on-year figure projected to be 3.6%, down from August's 3.7%. This is referred to as disinflation, signifying a period where prices are still on the rise but at a slower rate compared to previous periods. It's important to distinguish this from deflation, which involves prices falling. The core CPI, which excludes volatile food and energy costs representing underlying inflation, is anticipated to decline from 4.3% to 4.1% year-on-year. USD-CHF is moving in the descending channel, and the market has reached the lower low area of the channel. Global regulators praised the swift acquisition of Credit Suisse by UBS, noting that it was a decisive move that avoided the need for detailed procedural steps, thus preventing public panic concerning potential withdrawals. Global regulators have come to the defense of Switzerland's decision to support a rescue deal for Credit Suisse in March rather than pursuing liquidation. This support was articulated in a report that underscored the limitations of a regulatory framework.